Hi, I'm Sean Wade, CEO of Power Metal Resources, AIM-listed mining exploration incubator. It's a great pleasure to be back on Crux talking to Matt Gordon and to particularly and especially introduce Marcel Nally, who is the founder and chairman of Minestarters, a very exciting business into which Power Metal is going to be the cornerstone investor and a deal that's set to complete any day now. So we're really excited to be here, Matt, to talk to you and to hopefully explain the model, explain why we're doing it, and to answer hopefully questions that our investors have had as to what this investment means for them.
Fantastic. Sean, lovely to see you again, sir. And Marcel, lovely to meet you. Before we kind of dive into what Minestarters is and what it does and problems that it solves, Sean, Power Metals resource investors will be asking the question, what are we? Why are we investing in things like this? What's the answer?
So it's an excellent question, because this is really, to the heart of the story and to the heart of what we're talking about today. In some ways, you can always answer that by defining what you're not rather than what you are. But I'll put it another way. If you look at our corporate deck, for example, we've got a slide on there with a big picture of Rick Rule. And we're very pleased that Rick's a big investor. He owns over 4% of the company. And he describes it very simply as, he says it's kind of mining merchant bank. Now, what he really means by that is that we are an incubator. Now, you could call it a prospect generator or a project generator. But what it means in practice is that we take shareholders' capital, we look for early stage opportunities in natural resources. Now that could be obviously critical metals, precious metals, multiple geographies. We seek to add value to those through typically early stage exploration. That could mean a number of things. It can mean geochemistry, geophysics, it can mean exploration drilling. And we seek to crystallize that value usually in some form of capital markets activity. So that could be an IPO of some of the assets. We've successfully done that recently with First Development Resources in Australia. And prior to that with Guardian Metal Resources, which I know a lot of your listeners will know extremely well. And that's been an extremely successful investment for us, which we have now exited. As a result, we're now in a very strong cash position. And the objective now is to look at what's next and to redeploy that capital and increase the returns for investors. I mean, I've been the CEO for about 18 months now, and I would say, without checking the figures exactly, if you look at our shareholders' funds per share over that period, they've kind of roughly doubled. So although admittedly that isn't always reflected in the share price, my job is to take shareholders' funds and, as Brick puts it, turn 10-cent coins into $5 bills. So that's what Power Metal is all about. In one sense, it's a corporate finance activity, but it's very focused on natural resources and in particular at the early stage. So that's what brought us to this point and why we're keen to talk about it.
Right, okay, we're going to talk about Minestarters today. And again, I want to get into the weeds with regards to what precisely Minestarters does, how it works, and all of the wonderful benefits of the technology. But what is the problem that you think Minestarters can solve? And, and why do you think that kind of fits into the model that you've just described?
It's very simple. It's access to capital. I mean, if you look at the AIM market in particular over the last 2 to 3 years, Matt, I mean, quite frankly, it's been a desert. I mean, I said earlier, you were very excited about having successfully done the IPO of First Development Resources in Australia. I mean, Tristan Potts, who runs that company for us, is the absolute poster boy for perseverance of going through year after year of trying to get that deal done, trying to raise enough money for what is, a fantastic prospect and frankly, a deal that would have flown off the shelves during COVID, I'd say probably, and likely before. But what we've seen over the last 2 years has been just a huge drying up of available capital. So number one is it's very, very difficult to get good projects funded.
Are you talking specifically about early stage mining finance? Because obviously the market is quite hot at the moment for developers and producers. Yeah.
Look, if you've got 500,000 ounces or you've got, a proven rare earth resource, you're in business. If you've got some highly prospective land, on the other hand, which you think, for example, as we have in Saudi Arabia and Oman, for example, where the geologists are telling you, look, we really want to start getting under the surface because we think this could be well, any of the above, rare earths, copper, you name it. But, that needs some risk capital up front, which, we all know what the return profile and the risk profile of that is. Very best of luck to you. And that has been hard. So what you end up with is a small and diminishing capital pool, and a consequence of which is that you can't really invest the kind of sums that you're going to need to really get your resource. We've had projects, we've got fantastic projects where I've been able to spend in the hundreds of thousands of dollars on drilling, and we've made progress, and we've, as geologists will always say, we furthered our understanding of the asset and so on, but we haven't been able to get to a resource because we can't afford to do 10,000 meters of drilling or whatever it takes. And the market is not open for that, or at least not at any kind of sensible cost of capital. And look, my job is, I'm the finance guy in this context. I'm not a geologist, I'm not an engineer. In fact, my job is to say no to those people as much as I possibly can. I've got to optimize the capital structure and put what limited capital I have and I can access to work where we can make the very best returns. Now, if that capital is, drifting off out of the door, possibly in many cases never to return, that makes our job extremely difficult. So what we're looking for and have been looking for, and what Minestarters will solve for us, is access to a global liquid pool of capital that is, in a different form, as we'll go on to talk about, but that where we can bridge traditional mining finance, and the frankly, limited amount there is, specifically, as you say, for early stage, and we can bridge that capital pool into a much larger and more liquid one, where we can achieve what we want to do, which is to get very good assets properly funded at a sensible cost of capital, and make the kind of returns that people expect and demand from mining exploration.
Right, but let me try. I'm going to ask some questions that I think maybe a lot of people coming into this might ask. Because I hear what you're saying. The last 2 years has been difficult for early stage mining companies. Access to capital and the cost of that capital, as you say, has been tricky. But do you not feel that in this current market that the money that the developers and producers are seeing will kind of cascade down, flow downhill, whether it be through royalty streaming, private placement, and other forms of equity?
That's always been the argument, and I think it's important to be clear that we're not saying that the market is dead. I'm sure that we are in a cycle, and I'm well aware it's London Metal Exchange Week at the moment, and the atmosphere is very bullish. And I know that with various conferences that are coming up, that they're being very well attended, and I know that there is success being found in a lot of areas, a lot of projects. So we're not suggesting that that it's over. What we're suggesting is that there is a funding shortfall, particularly in critical metals. We all know what the major dynamics are: how much copper the world is going to need, how much X, Y, whatever. And those need to be found, they need to be discovered, and there is a critical shortfall of funding, even in a bullish environment for our end of the sector, to make that happen. Now, we think that with access to a much larger capital pool, we can be at the forefront of this, and we can deploy that capital into good projects and make those returns. So look, it's not dead, and I think it would be silly to suggest that, but I think it is equally right to say that there is an opportunity here to access a global pool of capital and do the job better.
Right, but you still got, in terms of understanding the size of the opportunity, the size of the market available to you, you're still going to have some of the same issues that the other funders might have, which is picking the right companies to back effectively. Is that right, or is it just a question of, and I'm sure we'll get into the economics in a later stage. So what do you see your challenges in terms of being able to kind of insert yourself into the current market dynamic?
Well, so that's a great question. So look, there's always a little bit of, you've got to eat what's on your plate. Okay, if you've only got a few million on the balance sheet, you're not going to get the call for the great assets. You're not going to get the first dibs from the brokers and the network and so on. I happen to have, multiple millions on my balance sheet at the moment. I've had 3 emails this morning saying, "Hey, would you like to come in on our thing in, Golden, wherever it is," or all those kind of things. So when you have a bit of capital, it's amazing how the phone starts ringing. So more capital will give us better access to bigger and better projects, and that's the key. It's not about some sort of noble academic exercise. Spending a lot of shareholders' money and finding out that certain areas of Africa do or don't have critical metals. This is about making money for shareholders, and that's the game here. We're custodians of shareholders' funds. We're not trying to get PhDs, and the more resource we have, the better access we have to the top projects. And we're going to go and talk about, when we talk about how Minestarters is going to work, we're going to talk about how Marcel and his technical team will curate the portfolio, will select the projects. We will have verification procedures and so on to onboard the projects. And we're obviously confident that this is going to do well and that we'll be at the top table for when the new assets, the good assets come.
Okay, and in terms of, I'm trying to understand the kind of deal sizes, the quantum of the money's being made available, the profile, are we pre-drill, post-resource, pre-PEA, what's going to be the sweet spot for you?
Well, I think perhaps this is a good opportunity to hand this to Marcel, because, I mean, it's important to understand, just before we do that this is an investment by Power Metal into this company. It's not... we're not sort of vending Power Metal into it, as it were. I mean, there's still other things that we still have other assets and so on. So, but we're talking specifically about what is Minestarters going to do. And I think when we talk about what kind of assets are we looking for, that's a question I'll pass to Mike.
Okay, you're right. Marcel, hello, sir. How are you?
Hi, Matthew. I'm well. Yourself?
Good man. Where are you based out of?
I'm based out of Portugal, Faro.
Fantastic. Beautiful part of the world. Well, look, do you mind if I kind of, I'm going to be starting from ground zero here, in the sense that I don't know too much about blockchain mechanics. I'm not too sure entirely what tokenization is. So I'm going to ask a bunch of questions, and so forgive me for the simplicity of them all. So are you building on a particular blockchain yourself, or how's it work?
Well, I'll just take you back to the beginning with this, because my background is as a mining geologist and as an exploration geologist. So I come from first principles, very much with the same sort of ideas as Sean, but probably from a different approach, in that I was going out there and finding these early stage mineral exploration opportunities, and whether that was in South America in the early part of my career, in Indonesia, and then latterly in Africa. And I was fortunate enough to be involved in 2 IPOs before I co-founded Moxico Resources. So I've seen how one can go out and find very good opportunities on the ground. In general, one is turning down around 90% of opportunities. What's difficult is actually getting funding for those opportunities. And it doesn't matter how good your opportunity is, it might take 18 to 24 months to find funding for that. So my interest in this in blockchain came in about 2013, around the time I was co-founding Moxico. I was buying and selling my first Bitcoins between 2013 and 2015, reading around it, getting to understand the blockchain. And I suppose Minestarters as a brand, I founded it in 2016, and then both came together with my background of trying to fund and finance early stage projects, and the appeal of the kind of blowout and opportunity within tokenization and decentralized finance, DeFi. I saw that there is an opportunity to introduce a whole new market to early stage mining finance. Tokenization can get a bad name when tokens are sold without any backing. We know, for one thing, Bitcoin, which is a different type of token, has got the backing of scarcity. That's what makes it valuable. Then we have real world asset type tokens, and these are tokens which are issued on the blockchain, in our case on a layer 2 blockchain, so will either be on Ethereum or Solana, something, or Coinbase, the base platform. we build a simple token on a layer 2. That token is then issued onto the market into an exchange. We sell the token, and all of the proceeds of the token come into the token treasury. That token treasury is then used in a gated sense to fund selected mineral exploration projects. We will have an investment committee which will be filtering the investment opportunities. So again, we might be turning down 95% of projects. People will be applying via our website, via our platform, to have their projects funded. Once they pass the investment committee, then we'll have a smart contract which will gate the funding allocations to them. So there'll be milestones, and funding is allocated as each milestone progresses. And if they fail to reach a milestone, they won't receive the next stage of funding. So in that way, we're going to be automating and taking a lot of the legwork out of the funding model.
Okay, and just so how's the converse work in terms of the mining project rights or revenue interests? How they legally linked to the digital tokens?
We will sign a contract with the with the company which holds the mineral license. So we'll sign a normal legal contract with them to provide them with funding.
Right, and so who then holds custody of the project documentation or equity, and how do you mirror
that? Yes.
How do you mirror these on the chain?
It's very simple. We hold it in both the on-chain and off-chain. We hold the legal rights to the equity in which we're investing.
Right. Okay. Just again, just describe for me again the kind of smart contract, automated milestone-based funding. Those releases, again, is that automated, or is it literally there's still some manual process in there?
In general, it's automated. What we will do if we sign a 0.5 or 1 million or $1.5 million funding arrangement with a company, then, for example, the first $500,000 will be released on completion of due diligence, which is our technical due diligence and our legal due diligence on the company. Then, for example, the next $500,000 will be released upon a pre-agreed milestone, which is the completion of their drilling or the completion of their initial JORC report or the achievement of a certain milestone, such as actually achieving a certain grade and width intersection. And then as we go along, as each milestone is reached, for example, reaching a JORC resource report, then they achieve additional funding. And that, in most cases, that can be automated, and that's using public announcements that feeds into the smart contract to release the funding without delay. But in certain cases, we will, of course, have a manual review of each milestone.
Yeah, good, because again, you said worry about sort of companies being incentivized to maybe push the boundaries there a little bit in terms of the reporting. But with your kind of because Minestarters has a treasury wallet, I assume. How does that interact with kind of the project wallets in terms of things like governance and controls?
The project itself. So the projects will be the mining company, and the project will be in charge of its own corporate governance.
Right.
But so Minestarters won't be responsible for that.
Right. So how do you protect yourself in that sense? When because obviously the money, the company will be incentivized to want the money to come out as quickly as possible. How do you kind of again protect yourself? Obviously, you talked about maybe some automated some oversight, human interaction, but do you meet regularly with the companies as well as just assessing what they're doing in any one moment?
Well, I expect we'll have in the contracts with the companies, they'll be responsible for their own corporate due diligence, ESG, etc. But of course, we can incentivize them with funding and with token issuances if they meet certain regulatory hurdles and milestones.
Matt, can I
Right,
just jump in here with a comment, because I think that this is a very important point, and this is what I think Marcel's been talking about in respect to the smart contract. So, if you take a sort of current scenario, okay, which is not in tokens, we commit to a project. We set up a project team. We give them a budget. Off they go. Now, what often happens? They come back and say, well, we got down to debt. We didn't quite get the mineralization we wanted. We think we just missed it. So what we really want to do is have another go. And in order to do that, we're going to need to pull some resources that we had allocated for another drill program in another location, but we're so close. And we furthered our understanding. We've done all these things. It's a pretty regular story. And they're talking to me, for example, who is not a geologist. And I'm saying, yeah, okay, guys, but look, what I do know is how much cash you've got and how sure are you that this is going to happen? Well, we're not sure. We just think we just missed the thing. And then the other problem, which is the other side, what the geologists would say is, yeah, but you see, we know what we're doing, and we having a lot of success. Exploration is difficult and uncertain. And what we can't have is, the board or whatever turn around and say, well, actually, look, we're bored of this. We're going elsewhere now. We're putting our money in something else. And what you end up, these are extreme examples. But what you're talking about is there's too much human element here. There's too much guesswork. There's too much unspecialist knowledge contributing to what is essentially, a financial decision, but a scientific decision at the same time. Now, what the smart contract does is it bakes it all in at the outset. So we say, okay, what are we trying to achieve here? How much do you think it's going to cost to get there? What's going to happen when we do get there? And it's not necessarily completely immutable, but it is setting a lot of the objectives, goals, and responsibilities at an early stage, rather than, I wouldn't say we do it by guesswork, but I think we all know that, it is a difficult and it's a very inexact science. And I think there is a lot of, and again, I don't want to overstate this, but there is the potential for a lot of value leakage in what we do. And one of the things that's really attracted this whole idea to me has been taking a lot of that uncertainty, human element out of it. You get together with a technical committee right at the beginning, and you set your goals, you set the milestones, and even if you were to reduce the leakage by, I don't know, 30%, 40%, whatever, you're adding value. So with limited amounts of capital, even in this context, obviously we're talking about a very big pool of capital, but the individual projects will have a certain amount. With a finite budget, you've got to make sure that every penny is being spent properly.
Well, that's where I was going with the next question, which is trying to understand what happens if protect yourselves. Is this any more likely to identify projects which will succeed or fail than any other system? And if the project does default, or the company misuses funds, doesn't allocate them where they should do, in terms of smart contract, clawbacks or penalties, or is it at that point, is it kind of pointless? You'd be clawing back nothing. How do you protect yourself?
I would say, if you don't mind just jumping in very quickly, what I would say is two things. One of which is there's not going to be a standard template to this. Every project is different. Every project is going to have different characteristics, so it'll be bespoke in each example. So it will take into account those sort of uncertainties and what have you. But the other, but that's more Marcel's sort of area. But when I think of my area, as it were, what we're talking about here is the potential to onboard a great number of projects. It's this is a multi-project portfolio. This is not, I'm not on here saying, Power Metal has decided to invest in this one great big asset, which is going to cost us X millions, and fingers crossed. This is, we could have, this is very scalable. You could have, I wouldn't want to say dozens, but you could have, multiple projects going on at one time. And the point with that is you're taking a portfolio approach. So whilst obviously we don't want to lose any value in any project, the shareholders overall, the Minestarters overall, is relatively insulated by taking a broad portfolio approach.
So how are the tokens minted, therefore? Is there kind of fixed supply? Is there inflationary mechanisms tied to new projects when they're onboarded?
What we do there, Matthew, is there's a limited token supplied. So we initially meant 120 million tokens, and no more tokens will ever be issued. So we can actually burn tokens, and we plan to burn tokens. So we're going to keep some in the treasury. We'll issue 70 million tokens to the public in tranches. They will be at an increasing value. So the first 20 million will be released at 10 US cents per token to raise $2 million. That will be the pre-ITO, the pre-initial token offering release. That will be tradable within a very short period of time on a platform. And by the time they're tradable, we're expecting them to have increased in value through the buzz that's created around them, through the demand, through our marketing. And at that second phase as well, we will also have some letters of intent with mining companies, where we'll actually have agreed to fund mining companies. They will look at us as one of many or several sources of funding. So we will get exclusive rights, but if we don't take up those rights, then of course they can go elsewhere for that.
Right. And obviously, look, token is its own term, but what's it most like? What does it represent? Equity, debt, revenue share, some kind of hybrid? I mean, how do I view it?
This question's come up a lot, and for those who are not, crypto sort of aficionados, which included me a few weeks ago, it is quite difficult to sort of conceptualize it. What is it? I mean, blockchain. Think of it as an ETF. So think of it as, and the way I like to think of this is, somebody has come along to try to help solve the problem that we identified right at the top, which is basically lack of funding. Now, if somebody came along and said, okay, I've got $1 billion, which I want to dedicate to early stage exploration. I'm setting up a gigantic ETF, which is going to be denominated in US dollars. I'm going to do an initial offering to, a seed round at this and this and this, but I'm going to have a great big pot of fund, a portfolio, of which each unit holder, in the case of an ETF, is a fractional owner of a curated portfolio of projects. So that's more or less what it is. But what's different about a token is it's 24/7 tradable, it's highly liquid, and it's in a market that's growing like absolute mad. I mean, I haven't got the numbers in front of me, but what's happened in the RWA token market just this year has been staggering in terms of growth. And the predictions, if you talk to the likes of BlackRock, who we know obviously are quite sort of crypto oriented, they're forecasting very large numbers for the overall scale of this section of the market. So it differs in the sense that it will trade differently, but as a kind of primary vehicle, if you like, it looks very much like an ETF.
Right. Okay. Understand. In which case, so Marcel, probably one for you. Which jurisdiction then governs the issuance of these Minestarter tokens? And and can you talk to me about things like regulatory classification? How have regulators in Dubai, UK, or elsewhere been engaged with regards to are these kind of, is there securities treatment required, and how do you determine investor eligibility, and ultimately who audits all of this?
Yes, we will have the tokens will be audited, and there are several respected auditors out there, and that's all part of the process. In terms of the token issuance, we're looking at BVI, British Virgin Islands, and that's one of the easier and faster ways to get a regulated token out there, which is a utility token. And this is also one of the, I suppose, technical aspects of what we're doing is what we have found, the process that people follow and that we intend to follow, because we're not actually doing anything new here. We're bringing a new way to finance mining projects, but this is already applied in real estate and in other asset areas such as art, NFTs, etc. But what we're going to be doing is issuing this token out of a convenient jurisdiction such as a BVI. We will also have a separate corporate entity to run it, which is in Dubai, and with the all of the regulatory oversight will be provided by those two jurisdictions.
Right. So they do all the anti-money laundering, know your customer kind
Yeah,
of
we'll
stuff.
have
Okay.
KYC
Yeah.
for all of our customers as they come on board. And in fact, what we intend to do is people will go to our website, click on the Buy Minestarters token button. There they can input their credit card, debit card details, or they can do bank transfer. They can also pay with other Bitcoin or other crypto. But in general, we're marketing this to a traditional mining investor. Well, there's two markets really. There's the traditional mining investor who sees tokenization coming, and it is coming like a freight train for all traded, let's say, capital shares, capital markets. So they can input, they can select how many tokens they want to buy. They put their money in, seamlessly the tokens go into their wallet, and they can exchange those tokens in their wallet for dollars, for Tether, or for any other crypto, or they can also off-ramp it. Let's say those tokens go up in value, they've made a profit, then they can take their profits and put the money back in their bank account. So that's going to be seamless integration into the banking system.
And with the BV, because you got the Dubai entity, which is admin, and the BVI as well. How do you handle the kind of taxation and revenue recognition across the multiple jurisdictions? Because obviously you've got investors from all across the world who'll be coming out of this.
We have a call this afternoon in about an hour and a half to talk about exactly.
Okay. I mean, have fun, because it's not.
Well, I'm having difficulty sleeping, so maybe
Okay.
No, but in seriousness, look, of course, there are a number of corporate issues in that respect. We've got to work through that in terms of what does this mean for Power Metal as an entity? What does it mean for the founders individually, et cetera, et cetera? So at the moment, we are nearing completion of the transaction, and obviously the building of the architecture, the issuance of token, and all of those issues are currently being worked on and addressed. So I'll give you some straight answers on it, but it's under control.
Okay, fine. And you'd be looking at including that mechanisms to protect investors from being exposed to unregulated securities, all that kind of good stuff. Okay, fine. And the lawyers will be out of Dubai, presumably, or
well, in the case of the corporate entity, yes, and but Dubai is, as people will know, I'm sure, is a flourishing jurisdiction for this kind of thing, and we would obviously love to do it in our home market, but it's crypto is a bit of a dirty word in the UK, so it's Dubai is open for business in this. They understand it. The frameworks, the advisors, all of the aspects we need, all derive out of that. And obviously, as Marcel said, out of the BVI as well as the actual issuing entity. So we're in the right place. We're very confident we've got the right structure.
Yeah, it's not a place you want to mess around, Dubai, I think. This platform is your own. You're not going to make it available to other third parties to raise capital with. Is that right?
No, that's right. I mean, look,
okay.
It's an iterative process. I mean, what could happen in the future, in terms of tokenizing, other things or whatever, we don't yet know. But what I do know is that, Marcel has patented a lot of the aspects, trademarked a lot of the, sort of the brand names and so on that we're using. And a tremendous amount of IP has been built by Marcel over the last pretty much decade to get to this point. So this is his baby. We're very lucky to be involved and very keen to be the cornerstone investor. But as to how this grows and develops, time will tell.
Okay, Marcel, how do you generate revenue?
Okay, well, revenue will be generated for Minestarters. Firstly, and most simply by management fees. So whenever we issue funding to a company, we will take some management fees from that, perhaps 5%. We can also we have an equity stake in that business, which at a certain point, if that business grows, will be tradable. We will also do, as part of the deal, we would like to take royalties. So if a company gets into production, we'll take a 1.5% net smelter royalty return. There's also potential for streaming. There's all sorts of financing mechanisms whereby we could stream the mining metals as well. So token treasury will continually be fed by revenues from the companies that we invest in.
Right. Okay. So you're making money through those sorts of fees. I'm going to call them fees broadly. That's silly to call NSRs that, but there's an immediate money and there's long-term potential capital there. In terms of the money that you go and raise yourselves to put into the projects, do you clip a coupon from that as well?
Well, the money to build the platform has already been committed by Power Metals, and that's how.
That's all you're doing. Okay.
Yes, that's how they get equity in the operating company. So they're going to own 35% and then 49%, and perhaps, one day take a majority. And that's what they see. So they see this as a growth engine and a revenue generating machine. And in terms of the only money we'll be raising from Minestarters is through token sales. And that goes directly into token treasury. And 100% of that, less any administration fees, goes straight to funding early stage mineral exploration projects.
So how do the project returns, how do they get distributed back to token holders, or does that go and sit in Dubai?
Yeah, they can, token holders, if they hold on to tokens, they can get a return, an interest on their tokens. So they can get 5, 10, 15%, depending if they hold them for 3, 6, 9, 12 months. And that they can take that in Minestarters tokens, or they can take that they can convert that then to dollars and digital dollars.
The other thing to mention on that also is as Marcel's already mentioned it, is this idea of burning tokens. So when cash comes back into the token treasury, the token, in a stylistic example, the token at this point has done its job in this particular project. It's been crystallized, and perhaps what we haven't talked about is perhaps where Power Metal there's synergy with how we do things and crystallizing assets. Asset gets crystallized. Let's say IPOs, we get the cash back. The token then is destroyed, which increases the scarcity and ultimately the value of the token. So it's quite a circular process. And I say that's illustrative, but it's not necessarily. This is not designed necessarily to be to pay people a dividend as such. It's designed to get capital increase.
Do you have to kind of recognize on your books the value of your investments over and above the tokens?
Okay, so that's a really important point. Okay, so and if you don't mind, this will lead into sort of as a Power Metal shareholder, why is this good for me? Because the question we've been asked a lot, and I don't mean to hijack our question, but it does answer something very fundamental. Because a lot of investors, we've done a few interviews, we've done a bit of media, and a lot of investors said, okay, look, I understand this as a token holder, all right? So if I go and buy the token, you take that cash, you put it into a mine, the mine makes money, my token goes up in value. Got that. But how does the value actually either remain or flow back to Minestarters, the vehicle, and then by extension, Power Metal? Okay, and so this is important because what you're really asking is, how do I value this thing on my balance sheet? Well, initially, assuming that all the milestones are met, we'll put 3 million in and we'll get 49% of it. And then our auditors will mark it to market and say, right, this thing is now worth X and you own 49% of it. But what is the X? What governs that? Now, what Marcel didn't quite go into in terms of the treasury, talked about 70% going into the market. But that means that a substantial proportion is going to remain in the Minestarters treasury itself. So Minestarters, if you think of this as, there's three things. There's Power Metal, there's Minestarters, and there's the token holder. Minestarters in the middle has its own value, has its own treasury, its own holding of tokens. So let's say, for the sake of argument, there's 30 million tokens. Those tokens are worth $1 each. That's $30 million worth of tokens. Power Metal shareholders own 49%. of $30 million worth of tokens. So just round numbers, call that $14.5 million. Now, are you going to mark that to market? Well, I mean, hopefully some of our more sympathetic correspondents might look at the price of the token and say, oh, you should be buying Power Metal shares now because Minestarter is now the whole market cap, all this usual kind of stuff. But it will be quite easy to do that because it'll be very visible. It's, as we've said, it's on chain, it's 24/7 traded. The price of the Minestarter token will be on the screen, and you can say, okay, this is the size of the treasury. This is the price of the token. This is how many Minestarters still owns. Therefore, by extension, Power Metal has X millions worth of value in this thing. And it's, it'll be live in that sense, and it'll be no different in reality to owning 43% of FDR, or as we did, 48% of Guardian Metal. People will say, okay, some of the parts equals. So it's another way for our shareholders to achieve value, but it also in a particularly visible way. And one of the motivations here, by the way, is what else could I have done with £3 million? Well, lots of things. Okay, tomorrow I could spend £3 million on an asset in Canada. And I'm going to tell you that, well, we think we could have potentially hundreds of ounces of gold here, but at the moment we only have some soil sampling. Nothing's going on my balance sheet that's visible to a shareholder for 3 years plus. I mean, probably longer. Now, that's not necessarily a problem, but it does mean that investment, which I'm making on your behalf, is highly illiquid, incredibly hard to value, very long duration, enormously high risk. Now that's the life we've chosen. Okay, we're not saying we don't like that. I'm just saying that it's very difficult to value these things. And if we want to deliver not just returns for shareholders on our balance sheet, but returns for shareholders in the form of a higher share price, which is ultimately my job, then we've got to make that value visible and tangible for those investors. And that's one of the number of things this business does. So we're not betting the shot here. We're putting in, we're expecting to put in 3 million. We're obviously putting in 1 million initially, and naturally, we think that this is going to work, and that it is going to generate very meaningful and visible value for shareholders. And I genuinely do expect that this will be translated into, over time, a much higher share price.
Okay, here you are. And I'm focusing questions on protection, right? Because it's a new thing. It's a new thing for a lot of people. So let me ask this. I think I asked you earlier in a different way, but maybe you'll answer this in a different way as well. If a funded project fails, remind me again, how are investor losses absorbed or mitigated? I mean, I think is that probably a Marcel one, isn't it?
Yeah, because we have that in our deck, in fact.
Yes,
Yeah.
I know. Marcel?
As with any early stage metal exploration investment, we accept a certain amount of risk. We're willing to take a punt. And this is what actually gives us a lot of strength, is that we will have the armory and the treasury to take a punt on a lot of projects that are more risk-averse funds. And there's many funds I've taken projects to in the past who found my projects too risky for certain reasons, whether it was the metallurgy, the jurisdiction, the management, the price of the metal price. But we'll be able to, if we have a well-stocked treasury, we can take that punt. We might get a 50% failure rate. We might even get a 70% failure rate. But John and I know, having been involved in high growth projects, that the 30 to 50% projects that do succeed have a 4x to 100x growth, and they will more than pay for the risk level and the risks we're willing to take, and the projects that fail.
Right. So, you mentioned again in the deck about ecosystem pools. So can we talk about how the treasury and those kind of pools, capital pools, are structured? And I guess more importantly, how are they governed? Is that going to be visible to your investors? Marcel, probably.
Yeah. The mechanics of that, we have to go through all of that. But
okay.
What we can say is that this token we are really launching a fund, and that fund will have a basket of projects. Initially, it's only one token. So that token, when you buy the token, it's not like buying one early stage project. You're buying 3, 10, or hopefully 100, 120 projects. Therefore, your risk is spread out across all of these different projects. But we will also be issuing, as time goes along, specialist tokens for gold. You could be able to buy a gold token, which just covers our gold projects, or a Latin American token, or for a Africa token, or a lithium token. So we'll have multiple tokens that we can roll out to cover all different markets that people are interested in investing in.
Okay, and I'll just say this for people listening in or watching this, because I always get complaints. I think someone's sitting on a PC and the fans are going a bit nuts. So that's the noise.
My laptop seems to be starting making noise every time I start talking. I don't know. I think it might be feedback from the Microsoft.
It's also of some kind.
Yeah. Right. Just be clear. Are you investing in private and public companies?
I would envisage mostly private companies, but from credible founders.
With a view to listing? I think that's what we're saying.
Yeah, and look, this is important because it is a fund in a sense, as we've described, but it's not a fund in the sense that we're going to be buying shares in things in the ordinary sense of a fund manager. That's not because we don't want to be a fund manager. That's simply because the opportunities for us exist at early stage where these things typically aren't listed in any case. But what does Power Metal do? We incubate and then we crystallize. We crystallize that often, usually, if we can, through IPO, and that's where there is a big synergy here. We're not here as a passive financial investor. Okay, we're here as an active participant in the business. I'm going to sit on the board of Minestarters, so I'll have a role to play in the selection of assets and in the deployment of the capital, obviously protecting Power Metal's interest in the business. But when it comes, in a year or so, Marcel comes to me and says, "Okay, look, we've now got this project to say, Jork Resources ready to take its first steps into the market. Let's do an IPO. Let's retain, whatever. Let's retain 40% of it. Let's sell the rest of the public, or let's take it out for cash, or something like that." That's where our skill set comes in, and and that's one of the exciting aspects here, is the extent to which our two business models intersect, rather than, because Marcel had a lot of choice here. He's been working on this for a very long time. He could have gone to any number of high net worth individuals, probably in his own neighborhood in Faro, and said, "Oh, I've got this brilliant idea." Raised a couple of million, got it going, and would have done a great job. But I think where we had a meeting of minds was not just that we were attracted by the investment in and of itself, but we were attracted to the way that our two businesses could work together. And going back to what I said earlier about maximizing capital, this allows us to maximize the capital on our balance sheet.
No, and I'll get to that, I promise. But just with private companies, there's a few downsides for the average investor, in the sense that these companies are as good as reporting as they need to be or want to be. So it makes it sort of harder to value them, and it makes it harder in terms to, I guess, monetize them in some way. And it's also harder to attract capital. Hence, you're stepping in here. So there's a lot which is opaque when companies are private. Do you need to believe that they, or with your help, they will want to go public at some point to kind of solve the liquidity risk problem, as it were? And if not, are they sort of less attractive to you?
Well, I think, look, every asset founder, wants to check out of his project at some point, doesn't he? And you've interviewed thousands, I suspect, of geologists, CEOs, who tells you that the thing that keeps him awake at night is that he's going to get taken out far too early before he's really, proved the size of his asset. What he means is he's not going to make as much money as he'd hoped out of this. What we're bringing to this is, an environment, meeting place, if you like, where these projects will all come together in an environment where there is specialist knowledge of what they do and what their challenges are, where the appropriate levels of capital can be deployed, and most importantly, where that smart contract can govern all those relationships. So fundamentally, this starts at the project. we're not going any. We've already had meetings and discussions on potential projects, and at this point, Marcel looking at it and saying, I think this is interesting. I think there's potential here. I think it's possibly a little bit too risky for the amount we're going to have in stage 1, but by stage 3, this is the kind of project I'm going to be looking at. And it starts with the project, it starts with the geology. We get on to then, okay, what is this all going to cost? How much do they need? And then we say to the project owner, are you conscious of what you are signing up for? This is a different to what you've maybe experienced in the past, where, perhaps you've had to IPO a little early, and where the demands that shareholders have put on you to produce results have been too difficult, where the cost of capital has been too high. We can extend the duration of the investment potentially outside of that. I mean, one of the problems that, Power Metal has, if you have limited access to capital, is you've got to let your offspring out into the big wide world before they're fully developed. And if we could incubate some of these assets for longer, and get more drills done, get more value added, get to resource level, for example, before we consider IPOing them, then we'd make people a lot more money. As it is, I've got to get them out of the door and on their own 2 feet probably sooner than I would like. And this is a problem going back to the top. This is a problem this thing is going to solve.
Right. Okay. Look, I've got a bunch of questions I wanted to ask around the kind of mining agreement structures, etc. But I think you've said it'll be each one will be unique, and you will kind of you will negotiate according to the type of company, the stage, the jurisdiction, the amount of money, etc. I'll avoid that for now. But have you got examples of, or have you got a lineup of companies wanting to do this today? Do you know this is something that people want?
Absolutely, yes. The problem we're solving is that early stage mining finance. Mining finance is still trapped in the 20th century, so it's slow, liquid, and dependent on insider networks. So what we intend to do is what we see happening is when we have a full token treasury, we will have people beating their path to our door, knowing that we are the new kid on the block when it comes to financing these projects. We already have, it's always going to be a difficult conversation, because every early stage mining project owner and people who are aligned with them, they think that their baby is the best. They don't know why they can't get funding. There's always that. And so it's always going to be that difficult conversation, which ones we are going to take on board and which ones we aren't. But I can see us being able to take those punts as all of these commodities go into a super cycle now, not just gold, but silver, copper, platinum, so many others. This is really the lifeblood of the industry, is funding these early stage projects. And, we only need one of these to go stellar, which they will, because they inevitably do. We are working in the geological exploration space where 1 in 100 does go stellar. And, that's what we really want to do. We want to be funding the ones that are 4x and the ones that are 100x. And they don't currently get funded, most of them.
But who's going to be most attracted to this? Given your conversations that you've had to date, and I hear what you're saying, is it the companies that just can't get conventional funding, or because they're private, it's a question of they don't know where to go? And, what other options are available to them? Who are you competing with at that level within the private space?
Sorry, Marcel, if you don't mind. In a sense, you're competing with me. If I wasn't doing this, and I've got 15, 16, 17 million on my balance sheet, and after stage 2, say, so was Marcel, we would be competing with each other.
Great. So tell me this then, Sean. Who would win?
Well, it depends. How many projects do I want at any one time? It depends, the quality of the explorationists and so on that I've got. And it more or less depends on how quickly I can achieve those results to get it out the door. Now, I would say if I was the project owner and we were both individually pitching, I'd go with Marcel, because first of all, I've got the smart contract which governs the responsibilities of each of us and ensures that I've got what I've signed up for in the first place. And it also says that we will take as long as it takes to get the job done properly. Whereas what's going to happen with me, potentially, is that, look, guys, you've done very well. We've made a discovery. We need to get this moving and out of the door because, it's not going to need to move on to the next one, but I've got to pay the bills. I've got to run a company. And I'm afraid you're still in short trousers, but you're out in the big wide world. We can take a longer term view on bigger and better projects through Minestarters than realistically we could ever do at Power. If I had access to 100 plus million, I would be the most popular guy in the London market. I don't have that. I've got a bit at the moment, but for most of the time, certainly since I've been CEO, I've had very little capital to deploy. So this is going to take all that stress away and say, look, if you've got a project, you want it funded, you want it done properly, sensibly by knowledgeable people that understand the risks that you're undertaking, understand the geology and all the other issues, the jurisdiction, the licensing issues, permitting, the environmental obligations, then you're in the right place. Because if you just go to, one-to-one conference and stuff, and you hold your tin out and ask for everybody to put money in, you're going to get very different, levels of expectation. You're going to get some people who want this to happen tomorrow, some people who take a long, it's all those things are very, very difficult. Whereas this is going to be, I don't want to coin a phrase here because we're not fully using it, but it's a super incubator in the sense. It's going to be big. It's going to have the potential to onboard a lot of projects, and it's going to give all those projects the time, space, and most importantly, the capital they need to get the job done properly, which is something that, going right back to the top of the conversation, is the problem that we have. Can't get the capital. We can't incubate for long enough. And and the 1 in 100 aspect remains the same. So it gets us into, and as I said, it gets us onto the top table. So, and the Friedlands and so on of the world, you have tremendous success. And I know Robert Friedland a little bit, and I admire him like we all do. How does he have such success? He spends 100 million or whatever it is a year to make sure he does.
Timing also helps, as with all good things.
Yeah.
Right. Okay. So there's something. But I better ask this question now before I forget, because I think you said something earlier, Marcel. You talk about maybe even looking to pull in kind of royalties. Would you set up a sort of separate tokenized royalty company? Because that's obviously a much different animal conventionally than other forms of capital. So how do you view the productization of your revenue streams further down the line?
Yeah, I quite like that idea. I think that's definitely something we would look at. Right now, what we're occupied with is to roll out the token, make it liquid, have a utility token that we get to market, that we create a buzz around, or then back it with real world assets. But really, the possibilities are endless with this. We have first mover advantage. There's no one else doing this, providing early stage mining finance through the token equity market, and we'll definitely look at all of those. That's structuring. That's really just structuring. We can do that as we go along.
Yeah, well, I think I've definitely heard lots of people come and pitch this to me over the past 2-3 years, where we've had, as Sean says, problems down to the exploration level, accessing capital and reasonably priced capital at that. They haven't actually got all of the moving parts put together. So, Sean, if I'll come back to you. You put £1 million quid in so far, and you're talking about putting another £2 million quid in. So you haven't gone full bore out of the gate. So you're looking for Minestarters to kind of prove up on sort of key technical and regulatory milestones, presumably. So what are they, and what's the timing?
So we essentially there are two main aspects. I mean, there are some technical bits and pieces that need to be achieved. But the two essential things are we must have a minimum viable product of a token that is, this is to get to stage 2, by the way. This is to get to the 2 million, to exercise the second option. So, we have to have a verifiable, properly audited, regulated token that we know is what we're setting out to do, and that has to be achieved. And we have to have a certain number of projects onboarded via letters of intent. Now, there are a couple of other aspects which are more technical, but essentially those are the two those are the two main milestones. And look, as Marcel said, I mean, we've already had a lot of interest in respect to projects, and we've already done a tremendous amount of work in respect to building the platform and creating the token. So I don't anticipate that this is necessarily going to take all that long. Now, just to go back to your point, sort of, are we sort of, or at least maybe sort of reading into your point, are we kind of dipping our toe in a little bit here? And 49%. I think it's important if shareholders are listening to this, because what's very important for them to understand is that if we had said stage one, we want 35% for $1 million. Stage two, we want to go up to 49% for another 2 million. Stage three, we want to go to say 51% or 70%, for example. Then that point, the point at which we would go into majority ownership, would almost certainly trigger a breach of the class tests, where given the value that we're expecting and given what the size of the raises and so on would be, that would be a reverse takeover in contemplation, which is something that, as everybody knows, the AIM authorities are very against. Now, those rules might be changing, but they haven't changed yet. And as it stands at the moment, this is as much as we are allowed to do without triggering basically all sorts of prospectuses and delistings and all that kind of corporate governance that nobody really wants at this point. So, it's possible that we would go further. In fact, it's desirable that we would, because we're certain this is going to work. But we would have to come back to that at a later time when and if we're in a position to publish a prospectus and those kind of issues.
Right. Okay. And Marcel, just back to you, because I said there's a lot to take in here. You talk about a kind of go to market strategy. What does that look like? How do you get the first 1,000, 10,000 token holders on board?
Yeah, it's a matter of, we realize that the mining finance community are usually people around my age or even older. So we want to make it as simple as possible, and we will make it as simple as possible for people who aren't natives in the crypto space. I think what the philosophy is, people are more and more coming to terms with the idea they have to take control of their own finances and manage their own finances. We're all connected 24/7 now. We have access to trading our own and managing our own nest eggs. So we see this as part of that. So we're going to be helping people. We do see as part of our role, without being condescending, to educate people and to bring people into this space, people who are of our generation, whereas people of our children's generation, and my oldest son is 22, they'd be unusual if they don't already have a token wallet on their phone, if they're not already mining crypto and trading crypto and paying for things in crypto, playing crypto, and actually, starting their own cryptocurrencies. Now, the difference with our token is that it is actually backed by a real-world asset. So that makes it far more credible. And I'll stop talking now because I'm also hearing feedback.
No, carry on. I'm just sort of interested in, okay, there's an education process. I get it. But where do you find these people to be able to, one, have the conversation with our age generation, or indeed persuade our kids' generation that this is something that they should consider? Because for the young generation, I think you were saying there's a fair bit of competition there. So where do you allocate your time and resources to sort of getting people on board as quickly as possible?
Maybe I can help on that a little bit, because there's a very big difference here between the funding a token holder and funding a shareholder for Power Metal. As Marcel said, the different age, different characteristics. A lot of this stuff is obviously going to be marketing. But it's about building a community, building a brand, a lot of which is surprisingly organic. Naturally, there are clearly influencers, and there are people that you can pay and so on. But the old, well, I say old, I mean, it's a bit unfair, but the sort of traditional style of PR, where you have a firm who sets up interviews for you, gets you in the paper, sort of you go out and meet the analysts and all that stuff. Obviously, that's important, has its place. That's conventional investor relations. That's really not how crypto world works. We were at the Token 2049 conference in Singapore where it was an extraordinary amount of energy, and it was just a completely different sort of, well, I hate to use the word vibe, but vibe to going to a usual sort of mining symposium. This was so you're building interest, a community, and you'll find if you look at X, for example, where Bitcoin treasury companies are a great example. They have these huge communities of people who are invested in the stock, who like talking about it, who put up their own analytics. One of the great things about crypto is that it lends itself extremely well to technical analysis, and a lot of people like to put up charts saying it's hitting the technical indicator for buying or selling or whatever, and a lot of that is done, as I say, organically. So it's not that we don't anticipate spending any money on marketing. I mean, clearly we do, and we will, but we're also expecting and anticipating that we're going to tap into these organic networks where there will be a lot of buzz around this thing. I mean, as I said, trades 24/7. So you've got people in Asia looking at it at the same time as people in the US, etc. So, and that's a great benefit.
Okay, and what are the concerns they may have will be around data security, cyber risk, in terms of management frameworks, etc. So, and that's not cheap. You talked about using maybe potentially Ethereum. I think early on, wasn't it? Was it Polygon or Ethereum? Was it you talked about, Marcel?
Yeah, Ethereum, Polygon, or base.
Yeah. So what have you spent today? What are you going to need to spend in terms of managing that kind of data security, cyber risk?
Yeah, it's actually one of the most important aspects, and it's not obviously the attractive side of this opportunity is to rush into token launch and get liquidity and get funds into the treasury and start funding mining mineral exploration projects and see them develop. But in the background, we do have to have independent blockchain auditors, and in fact, that's foresight by Sean and his team that as part of the gated milestone for the second phase of funding, we have to have the token audited by a credible auditor, and there are people like Certic, Placken, Quantstamp. They analyze the smart contracts and they look at the security vulnerabilities and things like the logic errors and the programming behind it and the compliance with token standards. Token standards like ERC20 is the standard one for a real world asset token. So what we would have is a publicly available audit report that confirms the token behaves correctly and there's no backdoors or exploitations. There are, everyone's heard of a rug pull. Well, if they haven't, that means that someone gets a hold of your code, and as soon as you have good liquidity or good treasury, then they can get a hold of your treasury. And that's something we really have to be aware of, and we will be aware of. So we're employing people in that space who can cover that. In terms of budget, we see the two major sides to our budget. One is the proprietary platforms, such as the security, and actually having a platform which is proprietary and is secure. And the second part of the budget is the marketing, which it gives that liquidity. And they are the two biggest parts of our budget to actually spend the money that Power is investing wisely. And they're the two largest parts of our budget.
Yeah, but marketing to companies and trying to get them on board with blockchain technology, and marketing to the tokens. Yeah,
I think marketing to companies will be easier.
Right.
We will have a certain amount of that, such as attending conferences, perhaps having a booth, but and certainly through our network, because as you know, the mining world is quite small, so a lot of it will be, that's quite getting people to realize that we provide funding. I think that will work quite fast because everyone has some funding, but actually marketing this opportunity to new token buyers, to mining investors, and previously people who were non-mining investors, I think that's going to be a much bigger net and probably a bigger market spend.
Yeah. Okay. Interesting. So what? And also, just on stick with the platform in terms of the architecture itself, is it scalable?
Definitely have it scalable. In fact, we could probably have it transferable as well to
Okay.
other industries. That's why I think that the IP for the platform itself will be very valuable on its own, because this will be a proprietary platform, a custom-made platform. So the platform itself will have its own copyright and it will have its own value.
Okay. What's the timeline on all of this, Marcel?
Well, we expect to have our token launched before the end of the year and tradable. We'll certainly have our initial or our pre-ITO token round in the coming weeks. Then by the end of the year, have that token actually tradable and liquid. And then in the first quarter of next year, have our first letters of intent with mining companies and have our public round of token issuance. So we intend to have 3 token issuances in the next 2 quarters.
And Sean, how does that work for you? And more importantly, how does that work for your shareholders? What should they be thinking?
Look, I think there's two ways here. And what I would say to a POW Metal shareholder is, in terms, I mean, other than obviously, is there anything more we can do to explain what this is and why we're doing it? Is, by all means, please come and own some tokens. I mean, this is part of a great investment for us, which is going to return value to you as a shareholder. But equally, I'm interested in talking to people who would like to play this perhaps through the POW Metal shares and say, well, I'm not crypto native. It's a little bit whizzy and difficult for me. I don't understand wallets. I don't happen to have a 12-year-old on hand who can do it all for me. But I recognize that a lot of value is going to accrue to POW Metal, and therefore I'm very happy to either continue holding them or I'm about to hold a few more. I mean, look, inevitably with anything we do as a business, when you are incubating and you're either selling off IPOs or you're making investment in something that can itself effectively here be traded, you run the risk of an arbitrage. And we saw that very markedly with Guardian Metal, where we owned at one point, something like 47% and a bit of it. And the shares were going up fantastically well, and none of that value was accruing to us. And a lot of people were going blue in the face saying, look at some of the parts here. But because a lot of shareholders would say, well, I don't really understand how the whole incubator engine thing works, but I do understand what Guardian Metal is doing, so I'll go and buy that one. Now, that's partly going back to the point I made right at the top, which is that the capital market for what we do has become very, very small, and you're talking about, the same individuals in a lot of cases. So we had our share price suffered a lot from that arbitrage. And you might argue that you're compounding that by doing another IPO in the form of FDR and doing this. You sure you are, but I think as people start to realize more and more that actually we're the engine in the middle of all of this that helps make it all happen, and that there is a tremendous amount of value in our processes and the things that we do, then you can see how the value is going to accrue both from the IPOs that we've done as elsewhere in the portfolio and our investment in this. So it is. I hope that shareholders will take it positively. I'm sure that some of them will want to get involved in the tokens, but I certainly hope that this validates our model in the eyes of the market, and hopefully people see, okay, I recognize that you are this mining merchant bank, if that's what it's called, which now has a fintech angle. So that's even more interesting.
Sean, Marcel's off. We will thank you very much for running through.
Running out of battery, so I was just checking if we have enough left.
Yes.
And I discovered why my microphone was making noise. I've turned down the gain, so next time hopefully we'll have a bit better sound.
You're using words that neither Sean or I understand. Gentlemen, appreciate your time today. Much better understanding of tokenization through this conversation. Stay in touch. Let us know how you get on. Obviously, a lot going on over the next few weeks and months with you guys, and we'll see you soon.
Thanks, Matthew. It's been a pleasure.
Thanks, Matthew. Lovely to see you again.